Members of a big Ontario university pension plan recently demanded their plan sell off its assets in the fossil fuels sector so as to starve oil and gas companies of capital. This is called divestment, and it is becoming an increasingly common demand among environmental activists. But will it work? Here are 5 problems with the divestment argument. Problem 1, it hurts workers. A well-run pension fund will have a portfolio that seeks to manage returns for its members based on a certain level of risk. Any deviation from this plan, by adding a politically motivated demand for divestment, for example, will either decrease returns or increase risk. And doing so undermines the retirement finances of all workers. This is morally wrong. Problem 2, the wrong target. If the goal is to starve companies of capital, activists must target firms' primary access to funds through stock and bond issues. A divestment strategy that sells off stock that has already been issued in what is called the secondary market will have no effect on a company's access to capital. Problem 3, pushing uphill. Starving the fossil fuel sector of capital only makes sense if other forms of energy are ready to pick up the slack. But despite optimistic claims that an energy transition is underway, the evidence suggests demand for oil and gas will remain high for decades. The International Energy Agency says fossil fuels will continue to make a major contribution to the global energy mix through 2050. Problem 4, no one wants to be poorer. Divestment is a strategy built on sacrifice, as it suggests pensioners and other investors are willing to accept substantially lower returns and higher costs in order to produce a greener future. But evidence suggests this is not the case. A CBC News poll in 2019 found that while nearly 2/3 of Canadians said fighting climate change was a top priority, half did not want to pay even $100 per year to do so. Problem 5, the unintended economic consequences. The goal of divestment is to financially harm fossil fuel companies and thereby limit their output. But evidence since 2021 shows that any sharp reduction in supply causes prices to rise. As a result, oil is now over $80 per barrel. And this potential for new profits has led many investors to pile into the sector, which will ultimately cause supply to increase. Divestment will not stop fossil fuel production because it does nothing to affect energy demand and ignores the real reasons why people still need fossil fuels. What it will do, however, is make retirees poorer. Does anyone think that's a good plan? Read more in Divestment Won't Stop Fossil Fuels, Nor Should It, by William McNally, only at c2cjournal.ca.